Good morning, everybody. It's Thursday, December 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the chat area, and we'll get to those during the show. You can also reach us anytime at info@agyield.com. Quickly here, overnight markets had March corn up 1.5 at 478. January soybeans were up 4 at 13.20 3/4, and March Chicago wheat was up 6 3/4 at 629 3/4. Jumping in here this morning, wanted to visit a little bit about, there's been quite a bit of chatter here as we go into the new year about rebalancing and exactly what that means for, the different sectors as it pertains to funds, rebalancing their positions and where they're allocating their money. So we wanted to dig a little deeper here this morning on just what that means for our markets. And for that, we'll shoot her right over to Ben to start us off this morning.
Good morning, everyone. In early January, from the 5th to 9th business day of the month, we have a commodity rebalancing period. And this is what we refer to as the index long, the commitment of traders. I think it's worth having a little discussion about. These are, it's just a small part of the bigger picture, a lot of times, of equity funds and portfolios that are managing a tremendous amount of money. And they want to have a little bit of commodity exposure in there. Typically, is kind of a soft hedge against inflation. And when you look at the commodity markets versus the equity markets, to them, it's a very small quantity to create a portion of diversification in their portfolios. A lot of times people refer to it as a hedge against inflation, to have that exposure. And when you rebalance, typically they're going to shed higher performing assets and buy lower performing assets, which could infer that corn may be the beneficiary of some strong buying. But I think that you have to be really careful with this, because I think that the rebalance is one of the worst kept secrets in the commodity industry. And more often than not, at least in the last 10 years, it tends to get traded ahead of time as people who are small specs, other traders looking to benefit from that period. And the one thing that I would caution is that the timing of this ends just a couple of days before we have our January report. So should we see some strength into that period, it would probably be create a really good opportunity to get into some of the things that Dustin has mentioned to our customers in our newswire. The fundamentals will always win in the end, regardless of managed money, regardless of index fund participation. And I would say that if it were to materialize and provide some opportunity, you should look heavily at that and probably not lean towards getting super friendly the corn market, especially in front of the final report, which, in my honest opinion, I think corn yields are going to go higher. And I'm really excited to see how corn performs following that report, because we've seen in a lot of cases, and this is by no means a suggestion, I don't have a crystal ball, I'm not putting on my tin hat, but the proclivity for markets to top on good news and bottom on bearish news is always there. But I do think that one of the things that creates headwinds for the index funds is that being long an asset that's in heavy carries creates a cost every month to be long those commodities when we're in a carry. So seeing how that rebalance is handled because of that, I think will be very interesting. And like I said, a lot of times these things are traded actually ahead of the date, where people position themselves to be able to reward the buying. So just a bit of caution on that, but it can create some pretty heavy volatility, some pretty heavy intraday volatility, as non-traditional participants. What a lot of people refer to them as other time frames, meaning they're not in this for the day or the week or the month. They're in it for the next year. So they can temporarily dislodge the market, but I would treat it as an opportunity should it materialize.
Yeah, Ben, and correct me if I'm wrong, do they usually do the rebalancing on the close, or they do it throughout the day? I always thought it was like an MOC order.
John, that's a great question. I would tell you that when we saw the index fund grow as markets went electronic and we had a much wider participation, It was definitely executed towards the end of the day on an MOC type environment. I think they've gotten a little bit more savvy in how they do that buying and how they fill it, much like all the other participants who are using algo generated buying programs. Some of the most simple ones that are out there, just they may program it to say, I want to buy 500x every 15 minutes, because they realize that they can run these markets over at times, and it's a net negative for them to be able to do that. So, you're every day we're competing. I don't know the numbers. It's kind of behind the veil, but I would think that a larger than 50% of our volume is generated by algorithms and or by buying programs or selling programs that are automated, to try to avoid that end of the day 10-cent run everyone over kind of situation.
Yeah, that makes sense.
So
yeah, and if I could add to this too, because a lot of times, like you said, the worst kept secret. There's a structure to the time frame that they will work within. So they're kind of mandated to rebalance within a certain number of days in the year. So everyone kind of knows that. And sometimes, like you said, it can be oversubscribed. Sometimes, it still helps explain why things are happening. And I could say the same thing for end of first notice day for the December corn contract. We talked a lot about that going into that time frame, that there might be a disproportionate number of market participants that are, left with basis only contracts or long somehow that need to roll. And there's a risk in that, because they're all kind of forced to do it within the same time frame. And of course, this is a year where you can see how, in hindsight, of course, see how that might have impacted the market if there was too many participants at once forced to trade that way. And I'm thinking, coming from what we just saw in corn, how far we are below like the 200-day moving average, for example, and just how suppressed corn has been, knowing that might be an opportunity, just having that at the forefront of our mind going into that January 5th timeframe. If you start to see that move, keep that in mind of maybe why that is happening, because we're still of the belief that there was a pretty good sized corn crop out there, as you mentioned, and there are still going to be a lot of producers that want to sell corn after the first of the year. So that's a force to be reckoned with as well. And any opportunities we can get, we're going to be excited to see that as a way to position and protect corn values for producers, if that's the case.
Well, and I'm going to note and throw in kind of an old school story to this, and we talk about these best kept secrets. And when we first started seeing some larger participation in the role of some of these positions, there were a lot of floor traders that got onto it early, and they started front running the role, and they made a really good living doing that. And then someone figured out that the people that were going to roll would not roll in a limit market, and they took all those guys to the woodshed, and I mean really took them to the woodshed in a Goldman roll in October of 2006. And so sometimes these great secrets can really blow up on you. It's having the humility to realize that it's a possibility out there, and how you want, like to Dustin's point, where you want to position yourself as an intrinsic long to be able to take advantage of it should it materialize.
Yeah, that's good stuff. Shifting gears here just for a second, we noticed yesterday, bond yields really took a tumble. Dollar index was on a sharp break again yesterday, hovering right around that 100 level. Hearing from a lot of our clients and folks in the last couple of weeks, they're seeing a little bit of a cut in some of these interest rates for operating that as they're going in for renewal, which is a good sign. Dustin, any thoughts there? I know the Fed, it appears that they're, they get about an 85% probability or so that they're going to cut by a quarter in March. I think that's kind of where everybody's leaning, but it'll be interesting.
Yeah, I think the market's forecasting even more cuts in the next year than the Fed is saying in the dot plots. But we had some, key numbers hit. I think the 30-year got below its, critical large round number there yesterday. Maybe that was where some of this came from. Gold made all new highs. The dollar index tumbled down to 100.5 on the index. So, you know, anything dollar denominated, like especially traditional ones such as gold, is seen as, you know, hard asset protection against falling currency. And you see that headline of gold making new all-time highs, you do have to think like maybe that is some of the strength that we've been finding. Beans had a pretty good, you know, late day rebound. Beans are highly, you know, subject to export markets, more so than corn. So, yeah, not surprised to see that a little bit. And it goes back to the question of like, you know, where is the ultimate bottom in, you know, in where grain prices can go when we finally do get back to kind of a normalized carryout situation. Bean carryout is projected to be, you know, sub 6% stocks to use still. So I wouldn't call that normal for sure. But corn's getting there, right? If we're talking about a 2.2 to 2.5 billion bushel carryout this year, I'd say that's fairly abundant, right? So where are prices capable of going to in this new currency environment after what we just went through with COVID and printing as many dollars as we have, and obviously clear inflation across the board, that we're probably not going to go back to pre-2020 levels for, you know, household goods. So does that mean that corn is no longer capable of, you know, sustaining in a lower threes environment like we had seen in a number of years, you know, prior to COVID? That's kind of the question, you know, everyone still has, is what, you know, what is a fair value for minimum value of corn? And, you know, whenever we see the dollar break, I know that is still going to be helpful in the short run when we still have a pretty good supply that American growers probably need to lay off for risk just from the 23 season. So it'd only be helpful, I think, in the short run.
Yeah, it's good stuff. Johnny, real quick, I know we took a look, just a few updates here on Brazilian weather. I know it's still on top of everybody's mind. What do we got?
I mean, long-term maps look pretty favorable. I know the shorter term did get a little drier for the Mato Grosso area, but yeah, I mean, it continues to add precipitation in the long-term forecast. So we'll just have to keep an eye on that. As we know, maps flip and flop on a dime. So yeah, but yeah, definitely.
You listen to three people and there's three variances.
That's exactly the case. But yeah, from the maps, it shows long-term is wetter for that area. So
very Dan, good. Something you mentioned there just regarding weather, just that the Mississippi River levels coming back up from this recent rain are projected to still.
Yeah, that's a great point. I was reading this morning. I mean, it's pretty significant. I mean, we're talking, you know, just in the next, they're saying over the next 7 to 8 days, we could see a 6 to 7 feet improvement, which, I mean, not a water guy, but it feels pretty drastic from where we've been started from, you know?
Yeah, absolutely.
Yeah, we need it. I mean, we're pretty low right now, you know, approaching, you know, a couple feet within record low levels, Memphis at this moment. So it's had 2 years of very low levels, obviously, but that this should push us up back above that low water mark at least, and I would think that's just going to help flow. So
I wanted to add something on basis as well. We had some processors in the Eastern Corn Belt letting people know that they could start delivering January contracts, and having sat in that seat. When you have back-to-back holiday weekends and you know, no one's delivering corn or beans on a Friday before a big holiday weekend. They're closed Saturday and Sunday. We have a holiday on Monday. We're back on Tuesday. People are kind of still dragging their feet. They get a couple more days, but over that 2-week period, those plants are still grinding, right? Or still crushing. And they're sending a message that, hey, we'll take some of your corn now because they expect it to come later, which kind of ties into the idea that the unhedged farmer is still looking for something to move it. So if you want to move some grain in early January, it's probably a good time to maybe make that call and see if there's some push in some of that basis, because they may not have on the books what they would like at this point. It doesn't mean they're not going to get it and corn's not going to flow freely, but the easy harvest corn is behind them. The easy soybeans are behind them. So if you're looking for something, you can always call and float an offer in front of them and see if you can get benefited for that.
Yeah, that's a good point, Ben. Really good point. And who knows, that could be a huge competitive advantage if you're able to move it and get it done, and
Right.
pick up a dime or 20 cents or something in the process. So very good. Just came into the open here. March corn up 1 3/4 pennies, 478. January soybeans are up 5 1/4 at 13.22, and March Chicago wheat's up 9 1/2 at 632 1/2. Every day we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. We're going to have export sales out tomorrow morning, and it will be the last war room for the year as we're off Monday. And then we'll restart with you again next week. And last but not least, got a little shout out to my daughter Morgan. It's her 5th birthday today, so hope you're having a great
birthday.
And
birthday.
So appreciate everybody stopping by to visit with us this morning, and you guys have a great day. We'll talk to you tomorrow.
Yeah, happy New Year, guys.
Happy New Year.